The bills are set down for second reading. No bills have been introduced. The House comes to questions, for I will answer question number 1 in the name of Jonathan Young.
Thank you, Mr. Speaker. My question is to the Minister of Finance and asks, what is the government doing to encourage investment, business growth and jobs?
Honourable Steven Joyce.
Mr. Speaker, on behalf of the Minister of Finance, today in Auckland, the Minister of Economic Development and myself released the 6th and final progress report in the government's business growth agenda. This latest report, which is called Building Capital Markets, updates on 50 initiatives that the government is working on to provide a productive and efficient environment for both investors and for the borrowers of capital for jobs and growth. Together with the 5 previous progress reports, which were on export markets, innovation, skills, infrastructure and natural resources, the government has now spelled out more than 300 initiatives that it has prioritised to assist businesses to become more competitive on the international playing field and to help them to be profitable and to invest and grow. It's only when that happens that we get the job growth that we're all working to see.
Well done. That's great. Supplementary.
Supplementary question, Jonathan Young.
Why was capital markets in particular chosen as a topic for the business growth agenda?
Honourable Steven Joyce.
Mr. Speaker, on behalf of the Minister of Finance, the global financial crisis brought home to everyone how imperative it is that markets function well, because we've seen around the world what happens when they don't. Compared with other countries, our public equity markets are small as a percentage of GDP. For example, our listed market capitalisation is equivalent to about 30% of the size of our economy, compared with 85% in Australia and nearly 120% of the United States. So even though New Zealanders are saving more than they have in the past, they may not yet be taking advantage of investment opportunities that are open to them. We're working to encourage that because we have an ambitious target of lifting exports to 40% of GDP by 2025. That will require an extra $160 to $200 billion of new productive capital, or around 70 to 90% more than currently invested in the export sector. And that's what we're working on through the Capital Markets Report.
Supplementary question, Jonathan Young.
What needs to happen to reduce the cost of capital?
Honourable Steven Joyce.
On behalf of the Minister of Finance, there are a broad range of areas we're working on to reduce the real interest rate premium that makes debt in New Zealand more expensive than in places like Australia or the US. In particular, factors that influence our borrowing costs being higher, including our small capital markets, our higher levels of national indebtedness, volatility in the exchange rate and low domestic savings compared with investment. We are seeing those ameliorated over the time as we're proceeding through the business growth agenda. For its own part, the government also must continue with its responsible fiscal management. As well, reforms like those planned to the Resource Management Act will help create an environment that encourages investment in the New Zealand economy.
Supplementary question, Honourable David Parker.
Why should New Zealanders believe him when he says he's going to grow exports and jobs, when data released by Statistics New Zealand today shows the value of manufactured exports fell by nearly 7%, and we know that 17,000 jobs were lost in the manufacturing sector in the past year?
Honourable Steven Joyce.
Mr. Speaker, on behalf of the Minister of Finance, I see the member is not referring to the fact that there was 1 month's only data, but he's a trained spotter, so he always likes to find something that can talk the New Zealand economy down. The reality is both our goods exports and our services exports have grown over the last few years, and in relation to job losses in manufacturing, the reality is with increased mechanisation of manufacturing, we've had that job loss situation for the last 40 years.
Supplementary question, Honourable David Parker.
Has the Minister of Finance seen the latest forecasts from the NZIER, which see the current account deficit blowing out to more than 8% of GDP in 4 years? And if so, why is he sticking to a plan that's failed to rebalance the economy towards exports and jobs?
Honourable Steven Joyce.
Well, Mr. Speaker, I did notice that the NZIER report on behalf of the Minister of Finance is expecting significantly higher growth over the next 2 years. And I would also note that if the balance of payments deficit did got to 8%, and we're not predicting that in either as Treasury, it would only be at levels last seen under the previous Labor government. And in terms of a plan, Mr Speaker, I would back this plan as against that plan, which is the one-page plan released by the Honourable David Parker, which calls to change gear.
Further subs. Question number 2, Dr Russell Norman.
Thank you, Mr Speaker. My question is to the Minister for Economic